What's up guys, back again for August's monthly update on the UK housing market. The numbers are in, so I'm back again with another video update. Guys, for this video, let me know in the comment section below what's happening in your local area of the UK. Whether you're in a small town or a big city, wherever you are in the UK, I'd love to know what's going on in your locality as it relates to property. Are prices surging? Are they not? Is the market booming? Is it slow? Let me know guys. But let's get straight into this video. So we've seen the third consecutive month of falling demand for homes in the UK. Right now we're at 23%, which guys, don't get it twisted, is still unprecedented. It is massive compared to demand over the last few decades, but we're at 23% now. Demand was 26% last month and 29% the month before. So we're still in the 20s. We've gone from 29 down to 26 and now we're at 23. And that's to be expected guys. As we move out of Corona, the search for space, people looking to move out of city locations into more rural, more spacious areas of the UK where the population density is lower, where you can get more per square foot for the price you pay for a house compared to city centre locations. That's still going on to an extent, but we've been going through the pandemic for close to 18 months now. So all of the people, or most of the people who are looking for extra space, bigger homes, less crowded towns and cities, they've essentially found them guys. And that's why we're seeing demand falling. I expect to see demand continue to fall over the coming months. And also, of course, another key factor behind the slowing down of demand is that stamp duty holiday ended in June, and this data is for the month of June. They release it 30 days after the month end that they're covering. So during this month, of course, stamp duty came to an end. So people are no longer able to have 0% stamp duty tax on properties up to £500,000. That threshold is now being reduced to £250,000. So all of the people that were piling in to try and get houses before June, that deadline is now passed, and I really do expect to see quite a significant decrease in demand next month. Don't hold me to that, but I'll be proved right or wrong in next month's update. But as I said, don't get it twisted guys, 23% demand is still huge. Price growth is at 5.4% for the 6 months of this year so far up to June. That's up from 2.2% this time last year. So more than double guys.
Jesus Christ.
And this is to be expected due to the fact that we still have unprecedented high demand in the UK overall. Now, as we scroll down, the stock of new homes over the last 12 months coming onto the market is 25.4% down compared to this time last year, guys. So we have over a quarter less properties on the market over the last 12 months to June than we did for the same time last year. That is a significantly large fall, guys. Let me know in the comment section below what you think is driving that. I have my own thoughts. So when we bring these two factors together, the 25% lack of supply. So overall, when we bring these two factors together, the 25% lower stock of homes for sale versus the 23% higher demand, we're talking about a lack of supply and a surplus of demand. Hence a continuing rising growth in prices, 5.4% currently, and at this rate, by the end of the year, if this trend continues, we could be at a 10% rise overall in house prices in the UK in 1 year, guys, 1 year. And we can look at this in a little bit more detail over the long term when we look at this graph right here, which shows the average UK house price over the last 15 years. Since January 2006. We had the economic crash, the great economic crash in 2008, which obviously continued into 2009, and the housing market bottomed out here, where average house prices went from a previous peak of £177,000 down to, it looks to be about £150,000, really in a short space of time. For those of you that can remember the last major economic crash, a lot of it was driven by the subprime mortgage crisis in the USA, which was to do with mortgage-backed security derivative products being sold off the back of really poorly structured housing loans across the USA. And that had a spillover effect into the UK economy, and usually when the economy takes a crash, so too does the housing market. So we saw this bottoming out. Now, let's look at what's happened since 2009. And bear in mind, in these 12 years since 2009, we've had stuff like Brexit, we've had the coronavirus pandemic, we've had the Eurozone debt crisis, a lot of economic shocks to our economy. But The housing market, guys, has grown consistently over the long term. And this is why I keep saying, guys, the housing market provides reliable growth over the long term, even in the face of economic crashes, which are inevitable. So, as we saw, pre-2008, the last major crash, the average house price in the UK was £177,000. We are now at £230,000. Way above the pre-crash highs. If you're sitting around in March 2012 wondering whether to buy right now then or wait another 3 years, those 3 years would have cost you an extra 20 grand on average. If you're sitting around in April 2015 wondering whether or not to buy then or wait another 3 years, that would have cost you about another 30 grand. And lastly, if you're sitting around in May wondering whether to buy or wait another 3 years, that would have cost you another 20 grand. Which is why more often than not, guys, when somebody asks me when is the best time to buy a property, I say right now, because the market over the long term is always rising. When you wait to buy, it's more often than not going to be even more expensive. That time costs you money when it comes to the housing market. So moving on, we talked about the search for space earlier on in this video, how people are moving out of city centres to less densely populated areas and bigger homes. We actually have data on this now, which is really useful and highlights that phenomenon right here. In every single region of the UK, guys, the growth in the price of houses is greater than the growth in the price of flats, because people want that space, guys. And in all of these regions, except for Scotland, the growth in the price of houses is materially, significantly larger than the growth in the price for flats. I don't know about you guys, but I've got a good few friends who've moved out of London to more spacious areas of the UK. Places like Essex, Kent, Surrey. There's a lot more greenery and a lot more space. Bigger houses that might cost, 500, 600 grand out there, but in London, you'll be paying close to £1 million for them. So let me know, guys, are you seeing the same amongst friends and families that you know? And then just expanding on that point a bit more, but talking about London specifically, we can see here, what this map right here shows us is a price growth in properties around the boroughs of London. The darker shaded areas are higher price growth, and then as they trend towards red, that's a lower price growth. And you can see a pattern here, right? These boroughs on the outskirts of London, Bromley, Bexley, Havering, for those of you who don't know London, as you go outside from the centre here, boroughs are a lot more green, you have bigger houses, you have a lot more space. And in line with what we said earlier, people are moving outside of the centre of London towards these boroughs here. So with that increased demand for houses in these areas, you're seeing higher price growth levels. The more people that are demanding your flat, the more people that are bidding for them, the higher the price that you can get. As you go in towards the centre of London, Kensington and Chelsea, Westminster, Tower Hamlets, etc., price growth is either at 0 or below. So it's actually negative, guys. People aren't trying to come and live in central London right now. And also another factor is that central London, very expensive. So during a pandemic and an economic downturn, people don't have the money to afford properties in central prime London. So just an interesting graphic for you guys there. And then lastly, let's look at the league tables, as I like to call them. Which cities in the UK are doing the best in terms of annual percentage price change? You have the usual suspects at the top: Liverpool, Manchester and Sheffield. Belfast is a city which I think a lot of people do sleep on, doing very well there. And you'll know this from my other videos and my other updates. The reason why these cities are doing so well compared to basically the northwest region of the UK, these cities are doing very well because what we're seeing is a lot of investment going into these cities from a regeneration perspective. So what do I mean by that? I mean lots of houses are being built, new houses, new developments are being built in these areas of the UK. In addition to that, the infrastructure is being improved. So we're talking about new stations, new roads, transport links are being heavily invested in to improve connectivity between the northern region and also between the south and the north. And with that, whenever you improve the infrastructure of a location, property prices naturally go up along with that. So if you own property up here, congratulations. If you're looking to invest maybe outside of where you live, these are definitely good cities to consider, because I expect this trend to continue. So let's now have a quick look at the news and see what's out there as it relates to property. I thought this article might interest you guys. It's essentially talking about mortgages, how the mortgage sector is looking in the light of the developments in the property market itself that we've just gone through. Now, what this article is telling us is that there essentially are a lot more mortgages on the market right now. In fact, the highest since March 2020, which makes sense because if you guys were or knew anybody that was going for a mortgage around that time, as soon as the coronavirus pandemic hit, mortgage lenders took a lot of products off the market. They just saw the risk and they said, we don't want to be lending to anyone new really in this current climate. That's how banks operate, guys. Now, as we're coming towards the end of the coronavirus pandemic, those mortgage products are coming back onto the market. Prior to the pandemic, there were 5,222, and now we're back up to 4,512. So still a few tentative lenders out there who still haven't put their products back on the market, but I expect that number to carry on growing. Also good news with regard to rates. We're seeing that average 2-year and 5-year fixed rate mortgages are now at 2.55% and 2.78%. I would bite a lender's arm off for that rate. That is really good, guys. Whilst we're currently at record low Bank of England interest rates. I can't call whether they'll go up or down over the next 6 to 12 months. Depends what the economy does. Let me know what you think in the comment section below. But whilst we're at record lows, those tend to be reflected in the rates that bank lend to customers like you and myself. So I'd definitely be taking a 2.78% mortgage rate over 5 years on a fixed if that was offered to me. Obviously, this is not financial advice, guys, but a good thing is a good thing. And then lastly, let's look at this other article from Estate Agents Today to do with flipping. Now, for those of you who don't know what flipping is essentially buying a property, ideally below market value, and then adding value to that. You might do a refurb, you might add a room, you might do an extension. There's a lot you can do with a house to increase its value. And then flipping it, selling it at a profit. And usually you want to do that in a short space of time. Now, there's two reasons why that's not working in this current market. The first is the supply of houses. As we saw earlier on, supply is down by almost a quarter on this time last year. So there just simply isn't as many properties and potential flips on the market that a person looking to do that can get or can purchase right now. And then secondly, we saw demand is high and the housing market is booming. Asking prices, guys, are arguably above what properties are worth right now because there's just so much demand and a lack of supply. And we just said that a key part of the flip strategy is getting a property below market value. So it's very tough to do that in this current market, guys. So if that's something that you're looking to do, have a think about those factors because those are two factors that can potentially work against you, but not impossible, guys. So guys, I hope you enjoyed this month's update. Please do drop a like, please do drop a comment, share this with a friend who you might find it useful, and I will see you guys next month.